Good morning. This is Andrew from Trend Following Mentor. It's the 20th of December 2013. And really what I want to talk about is interpreting the stock market and believing that anything can happen. What I always do, I start with the S&P 500. And where we're at right now is almost we have a little bit of a triple top here. 1, 2, 3. We're above the 10-period exponential moving average, which is a positive. We're also above a 30, which is positive. Had this big move up. But really what's bothersome, very bothersome, is that the momentum is diminishing. And is that really meaning that possibly a top could be in? Really, you got to take it day by day, and you have to look at the leading stocks. But putting everything into focus that this is an old bull market, that there's extreme optimism, that there is extreme margin debt where people are borrowing to buy more stock. It's not the most the best for the market, but in the meantime we're still favorable. The other thing I want to just say is like anything can happen, and you have to always believe that. And one of these stocks that you believe anything can happen is Winnebago. And Winnebago actually was one of the strongest stocks with the breaking out. Had this nice cup, he broke out here, had another breakout here, and then just pummeled. At a signal like this, these things can get a lot worse. And what you have to do is once you go through a 50-period exponential moving average on heavy volume, I'd suggest you exit. And again, it's not any personal information. It's something to learn from as a principle when you have a lot of downward movement on a lot of volume. Like another example would easily be this one, Lumber Liquidators. Let's open it. And you can see something very similar, where you had big moves down here, another huge move down here, and this is on negative volume. It's testing the 50-period exponential moving average right here. This is a 200-day moving average. If it crosses below a 200-day moving average, it's extremely, extremely negative for that stock. And this used to be one of the high flyers, one of the strongest stocks. And what's interesting is with some of these strongest stocks, these are the ones that fall the most in a correction or a bear market. And sometimes they can fall 2 times as much as the indices. Also, this 50-period exponential moving average, as much as it's made support here, or here it's bounced off, or here it's bounced off, or here it's bounced off, this can serve as very strong resistance and turn down very strongly. You have to take it day by day, and you have to really interpret what the market is doing without your opinions. You want to undertrade. You want to look for good setups. Again, this is Andrew from Trend Following Mentor. Thank you, and if there's any way I can help you, just let me know. Oops.